All right, welcome back. Today is Friday, May 13th. The markets are closed. Joining me today is Steve Straza. Steve, how are you doing today?
What's going on?
Not much. So the S&P 500 closed lower for its sixth straight week, something it hasn't done in over a decade. But this week was a little bit of a change of character. We actually closed about 4% off the lows of the week. You know, the last 4 or 5 weeks, we've been closing right at the lows of the week on Fridays. And that's kind of set a bearish tone. But, you know, this week we ended nicely positive. So we'll see where that brings us. Looking at the daily chart of the S&P 500, we were down as much as 19.7% from all-time highs yesterday, just shy of that official bear market territory. But we managed to find support right where we needed to at the VWAP from the COVID lows on the S&P 500. And if you don't know about VWAP, it's the volume weighted average price. So basically the average price that buyers and sellers have transacted at since the March 2020 lows. And you usually anchor it to a major low or a major high like that. But, you know, it's tough to get too excited about this bounce here because other major indices like the NASDAQ and the Russell 2000 are still well below their VWAP, over 5% below their VWAP from the COVID lows. And if you look at the NASDAQ here, back in March, April, it initially found support at the VWAP, similar to SPY is doing now, and it did rally about over 10%, but then ultimately rolled over and sliced through that VWAP, and it's kind of been downhill ever since for both the NASDAQ and the Russell 2000 here. So, you know, definitely a positive sign. It's certainly a low. Is it the low? The jury's still out on that, I think. So let's take a look at the sector performance. 10 out of the 11 sectors closed lower. Staples was the only one that closed positive and just barely. And again, that's not the sector you want to see leading. You know, staples are kind of a risk-off defensive sector. So Steve, what do you make of the market? I mean, it's been real brutal, and in a lot of ways, it's been worse in some ways than the decline we saw in the pandemic when the world was literally ending, right?
Yeah, depending on what stocks, right? For most stocks, it has been worse. And I like this chart. I think it does a really nice job of illustrating what you're talking about. So these are the 4 biggest stocks in the market, or most important stocks in America, maybe the world. It's Microsoft, Apple, Google, and Amazon. They are in a drawdown that is just as bad as the drawdown we saw in the first quarter of 2020 during the COVID crash, and also in late 2018 into that Christmas Eve bottom that we had, Q4 of 2018. You would have to zoom out pretty far, all the way back to the financial crisis, to find a period where these stocks suffered a worse drawdown than they're in today.
Whew. That is just brutal. So what are some of the areas of the market that you're looking towards for like a signal of a bottom?
I think the worst stocks need to show some follow through, right? So a lot of nice candles. I can't wait to do my weekly chart review this afternoon and tomorrow morning, because there are some really, really bullish candlesticks on the weekly charts, mostly in the worst areas. I think ARC is a great example. We'll look at biotechs too, but we really got a retest of those COVID lows, right? Which was the next level. And look at the wick on the weekly chart. What that's showing you is that buyers came in, to end out the week, and they almost were able to erase all of the losses from Monday through Wednesday of this week, which I think is pretty impressive because markets were under severe pressure earlier in the week.
Yeah, look at that. I found support right at the 2020 lows and the 2019 or 2018 lows.
Right. So that's big. SPY holding the VWAP is big. That's the level that we were watching. So not shocked at all seeing that reaction happen right at that level. I think you made a really good point. The NASDAQ and the Russell are the laggards. We need to see them recover now too, and get back above their AVWAPs from the COVID lows. So follow through from the weakest areas. And then I want to see NASDAQ and IWM back above those AVWAPs. And that could take some time.
Yeah. I mean, how about biotech? Very similar story to ARC, right? Very long leg on the weekly candle there.
We need follow through next week.
Yeah. All right. What about this one? A little bit of Dow theory for us.
So you can look at this chart one of two ways, right? If I was super bearish, I would say, oh, wow, this is a Dow theory sell signal. Both indexes are making new lows. There you go. Bearish confirmation, right? Or you could look at this. If I was super bullish, I would look at this and say, ooh, what a logical level for these areas to carve out a low and find some sort of support. S&P bounced off of these levels this week. The Dow averages bounced off of these AVWAPs this week. I think that makes a lot of sense. And this is the right place for us to start carving out some sort of tradable low.
Yeah. Wow. VWAP is really the indicator of the week, huh?
Yeah. AVWAP strikes again.
Yeah. I mean, in a lot of ways, it's more useful than something that's kind of static, like the 200-day moving average.
Yes, 100%. Couldn't agree more. We see prices react to it all the time. You made a good point. NASDAQ had found support there back in March. Russell tested that level 2 or 3 times before breaking down. So that's the market telling you that these are important levels.
Yeah. So, back to SPY, we got to continue keeping our eye on it. Just because it initially bounced doesn't mean that thing's going to hold forever. We'll see how much follow through we get, to your point. What about the dollar index, Steve? I mean, that one seems like it's kind of the wrecking ball of the market right now. It's continuing to print those new highs. I think we're at the highest level since like 2002, above that 104 resistance. What do you think?
I mean, listen, we've been looking at the strength from the dollar since late last year and asking ourselves, when is this going to start putting pressure on commodities? That's really what I'm looking for. If this 7-year base or whatever it is actually resolving higher, and this is a valid breakout, which certainly looks like it is, all the evidence would suggest that, yes, this is a valid breakout. We are going higher. I think it's prudent to think that positive correlation between commodities and the dollar, them rising together, that'll probably fade away. And I think you will see pressure on commodities. We've just lost so many leaders in the commodity related asset type trade, whether it's commodity stocks, commodity countries, commodity currencies. It's like energy and wheat is still working.
Yeah, so I was going to say it's almost like the commodity bull story has turned into just a energy related commodity bull market story, right?
It's gotten pretty thin out there.
Yeah, I mean, let's take a look at gasoline. Another all-time high for gasoline. That's a big base it's breaking out of. More pain at the pump probably, but what do you make of that?
I mean, listen, energy is crazy right now. The resilience from energy futures and energy stocks has been incredible. When I see this base, it looks a lot like the heating oil base also. Listen, if crude oil derivatives, which would be things like heating oil and gasoline, if they're going to break out of 15-year bases, probably going to be making a fresh leg higher, and crude oil is not going to be falling in that environment. It's probably headed back to all-time highs. And energy stocks are probably still doing well. What would really concern me, though, right, is the flip side of that is, like we just talked about, seeing all these commodity areas, commodity stocks, industrial metal stocks, the miners, copper stocks, steel stocks, commodity countries like Saudi Arabia, UAE, Qatar, seeing them all kind of break down and experience damage to their tactical trends. Then when I look at these bases testing these key former highs like gasoline and heating oil are, I think, wow, that's a really logical level for sellers to come in and knock this thing down.
All right, so let's take a look at rates real quick. They snapped a 5-week winning streak. So it was the first down week in 5 weeks for rates, right around that 3% level. We're actually a little bit below it now, and it found resistance right at those, 2019 highs, 2018 highs?
I think it's 18. Should be 18.
Yeah. What do you think? More downside follow through from there, or?
It's hard to say. It's really hard to say. I mean, we talked about this last week, I think, right, with how extended TLT was. We got that bounce. TLT is Treasury Bond Fund. So we got that bounce from treasuries. Rates came off a little bit. Listen, it was 3 days. We had 3 days of higher prices for bonds. And it really is a big deal, right? When rates come off like this, look at what happened with growth stocks. Look at what happened with ARK into the end of the week. That is what's putting pressure on a lot of the weakest areas. So I think if we don't continue to come off a bit, it's going to be hard for what I'm looking for, like we talked about at the top of the video, for these growthy stocks to catch a bid and carve out a bottom. without rates kind of rolling over, doing some sort of digestion or consolidation here, right? So that, to me, that's almost one and the same trade.
Steve, real quick before I let you go, is there one chart that's kind of at the front of your radar that's that you got your eyes on the most right now?
Well, since we're looking for follow through coming in next week, right? We want to see follow through from these growth stocks. I think the best indication we're going to get of that, we'll probably know come Saturday night, Sunday morning, how that's going to look, because we can check Bitcoin and Ethereum and crypto markets. So they're trading so tightly with large cap growth stocks these days. The large cap growth stocks that are in the MAGA index, the same names that drive the major averages. Bitcoin and Ethereum are higher and have a good weekend. I think that means stocks will have a good Monday, at least.
Yeah, I mean, I was kind of reluctant to embrace that correlation between the NASDAQ and Bitcoin at first, but it's been so tight lately. I mean, they're moving, like you said, in lockstep, that it's too tight to even ignore. And, the last few weeks, I've found myself when I check the futures in the morning, I'll look at Bitcoin too. And it's been a great leading indicator for specifically tech stocks and the NASDAQ.
Yeah. Bitcoin is probably the first chart that I look at when I get to my desk in the morning.
Yeah. Well, Steve, thank you so much for joining us. I hope you have a great weekend.
All right, man. You too.
Well, thank you guys for watching. If you enjoyed the show, please click like and subscribe, and we'll see you again next week. Thanks.